Yeah, but comfortably able to manage it yourself just because of proximity as well.
Yes, but that's a blessing and a curse.
A hundred
Yeah.
percent. A
Because
hundred
I
percent.
would I would always convince myself that it was close enough that I could just drive there
Yes.
and I would do a lot of work myself.
Yes.
And there was a pivotal time because I bought two apartment complexes in the same town. But there was a pivotal time. It was a Sunday afternoon, and I'm driving out to check on the property. Property manager calls me up and she says, Tony, there's a resident who's having an issue with her toilet. I could call the plumber. It's going to be time and a half because it's a weekend. You want me to make the call? And I was like, no, I'm not far. I'll take care of this one. And then 15 minutes later, I called her back. I said, no, call the plumber. This is not why I got in this business.
Hey, fellow savvy real estate investors. We have Tony Castronovo on our show today. Really excited to have you on the show today, Tony. And I'm just going to tell our listeners a little bit about you. So Tony is a multifamily investor with about 880 units under his portfolio in various capacities through GP, LPs, as well as some on his own. He's located in the Texas area in the United States. And most recently, he's actually launched a coaching program called Grit to Growth, which I'm really excited to hear about. It sort of seems to be a thing where when investors get to a certain level, a lot of investors, they want to give back in some way. So I'm assuming maybe this is Tony's way of giving back and making an impact on other people because, real estate has obviously impacted your life with the great success that you've had so far. So we'd love to hear more about that. So without further ado, I will let Tony introduce himself and tell you a little bit more about his background. And, Tony, maybe tell us about what led you to get into real estate investing as well.
Okay, sounds great. Well, thanks for that intro as well. So just to add on to that a little bit, Tony Castronovo, based in the Houston, Texas area. I've been here almost 26 years now. I came here originally because of oil and gas. I went to school as a petroleum engineer, and when I graduated college, oil was $10 a barrel, and there were far and few between jobs, but I still always had a dream of coming to Texas. So I'd never been to Houston, and I landed a job working in management consulting. I worked for what is now Accenture. And they said, where do you want to go? I said, I'll go to Houston, Texas. So that's what got me here. And once I got into consulting, I kind of stuck there. It was a great career path for me. I worked for a number of big firms like Ernst & Young and Accenture, but also some smaller companies. So while working in my W-2 day job, I somehow got the spark to get involved in real estate. I think it went back to, maybe, early 2000-ish timeframe where I saw a relative who was out there in the Ohio area. He was buying single family homes. He was turning them into rentals. He was a pretty handy guy. So he did a lot of the work himself. And it just kind of seemed like something that could be a way to generate some income. And I used to actually work in a construction field before going to engineering school. So I thought, man, that would be great use of my skills, and I could do this on the side. And fast forward a little bit, because I had some kids along the way there, and they kind of take your time away. But in 2014, I finally started my own real estate company, and that started in the single family space.
That's amazing. And yeah, you know what? I'm actually in a similar background as you. I studied engineering and construction management as well. My first job out of school was working for a large engineering and construction company we were more doing power plant construction. So that's interesting.
Yeah.
Similar backgrounds. And but I'm curious to know, for those who don't know, what does management consulting involve?
It's funny that I really feel all those skills translate into being a real estate investor and an entrepreneur. And my niche, because management consulting can be a lot of things, but my niche was something called project portfolio management, which basically means that a lot of large corporations, they treat projects as investments, and they have a portfolio of these projects where they need to make sure they align with the strategy of the organization. They have, budgets for them to manage whatever returns they might get out of the project, as well as the expenses to complete the project. And then, over time, they're going to be tracking metrics and performance and things like that. And so I would help organizations to develop systems and processes to evaluate their portfolios and optimize their portfolios for the highest returns. And I never knew back then that would then translate into real estate, because we do something real similar, right?
Exactly.
But it's just a different asset.
For sure. No, that's very interesting. So tell us, like, you started buying single family homes, I'm assuming, at the beginning when you got that real estate bug. Tell us, like, what happened then.
Yeah, so back in, I'll step back just a little bit. I did a lot of education in the early 2000 kind of time frame. And it took me literally about 10 years before I finally pulled the trigger and did something about it. But back in the early days, I don't recall a Bigger Pockets or anything out there. This was like, grab a book from the library or, a bookstore and try to learn as much as you can about this topic. So that's what I did. I still have a few of those books on my bookshelf. I recently had my son start reading them. He's in college now. But when I really started getting into it, I started, listening to all the Bigger Pockets podcasts and realizing how the BRRRR method worked. And for those that aren't familiar with that, it's buy, let's see if I get the acronym right: buy, rehab, refi. It's been so long.
Yes.
Refinance and repeat. Right. So basically, I would buy a distressed single family home. I would renovate it, and I would place a tenant in it. I would refinance that typically within 90 days. And then I'd pull out most of my cash, and then I'd go off and do the next one. And I got pretty good at that process. I was buying about maybe 4 homes a year, which is not crushing it, but it was enough to prove the model and start to build a portfolio. And a little flipping along the way there, I sold 1 or 2. But then at a certain point, 2018, I started feeling like, all right, 1 unit at a time. It's just a little bit more cash flow, a little bit more equity. I want to go bigger. I want to go faster. And so I just ripped the Band-Aid off and said, I'm going all in on multifamily. And in 2018, I sold my single family portfolio and just bought the biggest apartment complex I could afford. And that happened to be a 20 unit, which, by today's measures is a good first starting point. But, I thought I was doing amazing going from 8 single family homes to a 20 unit apartment complex, only to learn that I needed to start thinking bigger because there was a lot more opportunity out there.
Yeah, I'm for sure. And I'm curious to know, tell us a little bit about your first multifamily and what that experience was like, purchase price, perhaps where it was, and maybe share some of the numbers. And do you still own that today, or have you sold that?
I have sold it. So I've gone full cycle on 2 multifamily deals. I've done 7 multifamily deals so far. That first one was what I call an IRO, independent real estate owned. So basically, I opened my checkbook and I was the only person involved in the deal. Now, of course, I hired property management, but that was me being the asset manager, me being the general contractor and hiring subs and different vendors. I financed it. I signed on the loan. I mean, it was all me. And that's all I knew because that's how I did it in the single family. And so I started kind of learning, we were talking off air here a little bit about attending some multifamily meetups, guys who were doing syndication, and, we can talk about that, but that's how I evolved and transformed. But back in the days when I was doing that 20 unit, it was picture perfect, everything that they tell you in all the books and the podcasts to go out looking for. A mom and pop, right?
Yeah.
This guy was 82 years old and he had owned this place for 40 years and he was never raising rents. When we did the lease audit, I was looking through leases and the late charges were $3 because he just never changed these lease agreements for many, many decades ago, and people never left because it was such a great deal for them. But the place was like falling apart, around all these residents. And so we came in and renovated the entire place, minus one unit. We had one tenant who just didn't want to go and didn't care to necessarily get anything upgraded, but was willing to keep paying more rent. So we renovated 19 out of 20 units.
That's amazing. You left the 1 unit for the next buyer.
Yeah. We came in, we put new appliances in there and, did a few things for him, but he just, he didn't want to go. We were going to move him into a new unit, but he was just a guy that was comfortable where he was at and, willing to pay more for it. So, but we bought the place for $980K. This is in 2018. We put in about $325K in the renovations. We ended up selling it for a little over 1.8 million 3 years later. So it was about
wow, that's amazing.
Yeah.
It was a great transaction. I would say it was about 30 to 31% IRR on that deal.
Yeah, no, that's.
And this was what, in 2 years?
3 years.
3 years.
3 years. Okay, that's amazing.
Yeah. So, I mean, obviously the first deal went well. You did good. It was almost like a full BRRRR, right? Like an apartment BRRRR, except it just took a little bit longer than 90 days. And I'm assuming that during the time that you owned it, once it was renovated, you were getting way better cash flow. It was doing pretty well. So what prevented you from just doing that again? Like what pivoted you into, thinking bigger and doing these larger deals or thinking about syndication? Because it sounded like you were operating as like an individual entity here, no partners. Sort of what was that trigger?
Which is what we've been doing all along too. So
yeah, same thing. But we've obviously vertically integrated ourselves. We have our own in-house property management, our own in-house construction management. But yeah, it's very similar. Where we were just also doing the same thing like you. We were BRRRing apartments one after the other,
and we would do the same thing. Like we would buy our 12 to 30 unit apartments. So
so I'm interested to know like where obviously you made great money on it. So what was the next step and why did it happen that way?
Well, I mean, first of all, there's nothing wrong with 20, 30 unit. I struggled for a little while on a decision of, do I just keep doing that or do I think bigger and try to buy larger? Because at some point you become cash constrained. Yeah. And so on that 20 unit, again, I didn't know there was another way. I just thought, you go put 20 to 25% down on it and somehow you find a way to renovate it. And I got a little bit of money from the bank to do the renovations, but nowhere near what the property really called for. And so, the pain was, I was stretching myself. I was pulling lines of credit and cash advances on credit cards. And oh my God, my credit score was like really pathetic. And I was like, how do I do this? How do people like run multifamily deals? And so then I realized that man, if you're financing the entire project on your own, that loan was a recourse loan. So, I put the 20% down on it. I was able to get an 80% loan to cost on it. And so I had the money sunk in there. And then I mentioned $325K of renovations. That had to come from somewhere. And so I had to keep this project going. And it was a very fast renovation. We renovated the 19 units in about 7 months.
Wow.
So it was pretty quick, and a lot of external work. We replaced the entire roof. We replaced all the HVAC units inside and out. We built a laundry room that wasn't there when we started. We replaced balconies. I mean, we did a lot of work to this place. And that was very capital intensive. So that's kind of the reason why I started looking for another angle, because I just didn't want to put myself through that kind of pain again. I will say that I refinanced that property 2 times in 3 years because we were adding more value. We drove rents from $500 a month to $750, and we basically turned all the units but the one. So that's kind of the why we moved into syndication model.
Right. And was this close to home in Houston?
It was maybe an hour and 15 minutes away.
Okay.
In a college town, for those that know where College Station is, where Texas A&M University is. Yeah. And it wasn't student housing though.
Yeah, but comfortably able to manage it yourself just because of proximity as well.
Yes, but that's a blessing and a curse.
100%.
Because
100%.
I would always convince myself that it was close enough that I could just drive there.
Yes.
And I would do a lot of work myself.
Yes.
And there was a pivotal time, because I bought 2 apartment complexes in the same town. But there was a pivotal time. It was a Sunday afternoon, and I'm driving out to check on the property. Property manager calls me up, and she says, "Tony, there's a resident who's having an issue with her toilet. I could call the plumber. It's going to be time and a half because it's a weekend. You want me to make the call?" And I was like, no, I'm not far. I'll take care of this one.
Oh.
And then 15 minutes later, I called her back. I said, "No, call the plumber. This is not why I got in this business."
Yeah,
that's right.
So yeah, it was interesting.
I know. And it's interesting too, because I feel the same way. Like our properties are all located within an hour radius from our home too. And we don't do the day-to-day, but we do the same thing as you which is we go there from time to time and check up on things. And whenever you go, there's I find myself like starting to pick up garbage from the outside of the property because I see it, right? Or I notice things, and it's in your nature. Like these are your assets. Like there's such a strong emotional thing there that you start getting into it, right? Like you're like sweeping the foyer, or like and then you catch yourself. You're like, why am I doing this? Right. So I completely understand, but I also understand the sentiment that once you're there, there's no holding back, right? It's
For 2 years, my residents thought I was the maintenance guy.
Yeah, that's funny.
Yeah. So, and you're 100% right when you speak of like exactly what you just said in your previous sentence is like, you asked yourself, like, why am I doing this? Like, why did I get into real estate? Right. So I think that goes back to how we pivot and what we do. It has to come back to that why. So yeah, share with us, like, what was your why? Like, why did you get into real estate? And then how did that impact your decision to now start saying, okay, I need to pivot again. So now I've been in singles, now I've owned small multis, and now I'm going to pivot one more time here.
Yeah, I pivoted a lot. I mean, I think that originally the why was kind of 2 reasons. One was it was a way to build retirement income. And it was something that was aligned to my background in construction. So I just always had this natural interest in real estate. But then over time, especially as I started getting more into multifamily and building more of a bigger portfolio and seeing the financial aspects of it, now it became less about retirement and a new way of like a new career. And so I had many conversations with my boss along the way. We'd known each other for many years, and it was always funny when I first started out, bought one house, he said, "Hey, that's a cool hobby." Okay. And then I bought the second house and the third house, and he said, "Okay, it sounds like maybe this could be a distraction. You sure you can still manage your job and have these homes?" And by the time I bought my first apartment complex, he was like, "You think if I invest with you, you can make me rich?"
Wow.
So yes, I pivoted. In fact, a little over a year ago, I left my W-2 job in management consulting and went full-time into real estate.
Yeah,
Wow.
no, that's great. So was the intention to leave your job as like almost like a very early retirement, or was it that, you just wanted the change? Like what was the reason that you decided at that point to leave your job?
So when you listen to all those Bigger Pockets podcasts and people talk about financial freedom and, what's your number? How many units do you need to have before you can leave? And this concept of replacing your W-2 income with cash flow. Well, that sounds really good on paper, but I'm telling you that's hard. I mean, you've got to really think about, some alternative ways to get that done, because cash flow is there, but especially in today's world with the way interest rates are and so forth, it's a little tough to replace a really good job. Now, if you're like entry level, you can probably replace that job pretty quick. But if you've been in a professional career for 25 years, you have a pretty good income. It's very hard to replace that.
Yeah.
So a few things to consider. One is, I always think, don't worry about replacing the income, because if you're doing your job well, you're going to keep getting bonuses and raises, and you're just chasing something. So why not focus on the expense side? Cover your expenses with whatever passive income you're getting off of your investments. So that's a different perspective, because also you can control your expenses. You can start reducing them. My wife and I downsized our house a few years ago. We ended up buying a house that was like 10 years newer, and we cut $1,000 off of our monthly payment. And it's great. We love it. And it was like a no-brainer. We just saved $1,000. If you're getting a couple $100 cash flow, that's 5 units right there that we don't have to acquire. Right. So cover the expenses. But the other thing was, I just enjoy the real estate career and life. And so I was going to find a way to make it work regardless of whether I hit a financial freedom number. So that was just a choice that I made.
Right.
Yeah.
So what does your day look like now? What do you, are you looking for deals? Are you talking to investors? And I also want to get into your latest acquisition as well later on.
Yeah. So my day is a little fragmented sometimes, because I have 5 businesses, and some just kind of sprung up, for certain necessities. Like had a goal this year to buy a second home out in either Colorado or Utah. Early in the year, I didn't know where I would do that. We ended up in Utah. And so it made sense to turn it into a short-term rental while we're not there. And so we launched a vacation rental company. And so
Nice.
that's kind of off and running a little bit now. And then, like I mentioned to you off air, I got the coaching business that recently started. So I'm really actively working to grow that. Now, my multifamily business, I'm always looking for deals. I'm working with a lot of partners. I work on my asset management and have a number of calls throughout the week with my teams to run each of the assets that we've acquired. So it's kind of a myriad of business development, as well as sort of project management, asset management, and, try to have a little fun too.
Yeah, for sure.
Yeah. So maybe talk to us a little bit, like Jose was saying, about your latest acquisition. What's going on tell us a little bit about, what's going on in the multifamily space. Are you guys still acquiring? I know you recently just closed on a deal. Tell us about that.
Yeah, so that's a 75 unit in San Antonio, Texas. That was kind of a long process because it was a loan assumption, which is seemingly more prevalent right now because of interest rates and a bit of a pivot of sorts. We started in, I guess, about June. We got under contract on that, and we just closed at the end of November. So it took a long time because now you're dealing with Freddie Mac, government agency. It kind of moves at government pace, and just something that we had to kind of work with and communicate with our investors. But we're closed and we're off to the races on trying to reposition the asset. But it's a mid-60s vintage. It's been renovated quite a bit. The previous owner put in about $2.5 million before we bought it. Nice. So the units look great. A lot of work to the exterior. We're coming in with our CapEx budget to basically refresh it and just, bring the landscaping up to par, repaint where we need to repaint. We've budgeted for parking lot ceiling and striping, that sort of thing. But nothing significant that needs to be done.
Yeah, and share the numbers with us if you don't mind. Was your purchase price per unit on that?
Oh man, you gotta get me to pull the calculator out. So we bought it for $6.85 million. So whatever that
definitely
unit,
under 100,000 unit. That seems like a great price. And is it you mentioned and you had a property manager lined up for that one? This is a new acquisition in a new market, right?
It is a new acquisition. It's a new market for me. I've been trying to get into San Antonio for quite some time. Normally I focus on the Houston area, but also in the Oklahoma City area. I've got an asset up in the DFW area as well. But San Antonio is a market that I've really been looking at for quite some time. I have some family there as well, so it kind of makes sense. But property management, one of the general partners on our deal, she has had a property management company for a number of years and really focuses on Austin, San Antonio, and surrounding areas. So it just made sense to have her team come in and property manage it.
Nice.
Yeah, no, that's cool. So, so deals under the way, a coaching business on the go, now a short-term rentals on the go too. It sounds like you've more than replaced your busyness from, transitioning out, which is, I think, what investors do, right? Like when you're passionate about it, you find a way to create opportunities for yourself and find a way to basically create income through various business ventures. And, something that you hit on, which I think is really important, is that a lot of people do, like you said, there's a lot of people who talk about like, I need X number of doors and I need X number of cash flow and I need to do all of these things. But you're right, like really understanding your numbers and understanding your expenses and understanding really what you're trying to achieve. And also keeping in mind, like, I think this is a good takeaway from your example, is that multiple streams of income, like, there's ways to generate income through real estate that are more passive in nature. And then there's ways to generate income through ways that are more active in nature. And there's a combination of those two, which are the perfect sweet spot to create sort of that financial freedom that people need, right? So you can't have one without the other, really, in my opinion. You need to have, that long-term wealth building, which you're doing, and then sort of that short-term income that's coming in through these other ventures, which you're also doing, which is then allowing you to sort of, sleep at night.
Yeah, absolutely. And you're kind of hitting on something too that we haven't really talked about, but it's the tax side of things, right? It, as the saying goes, it's not what you make, it's what you keep.
Yes.
Yeah.
And so that's where real estate can really come in, is getting some true tax benefits. And so, like, for me, every time we buy a property, we're doing a cost segregation on it and getting bonus depreciation, which can offset income. If I'm full-time in real estate now, that means I can claim to be a real estate professional on my tax return. And so I can start applying these losses, if you will, paper losses, depreciation, to my active income, and not just my passive income. So when you start thinking about, well, what kind of money do I need to make? It's actually probably less than you think, because in your W-2, you're getting this gross, Uncle Sam takes his cut, and your take home is a lot less, right?
Yeah,
for sure.
Absolutely.
Yeah. Well, that's a great point. And of course, the a lot of people don't realize that they gotta, at the beginning at least, they gotta sacrifice, right? They can't be going on luxury vacations, because your W-2 job, you may have making some high income, but you also have that lifestyle that you were used to. You may have to cut back for some of our audience that is looking to transition into becoming a full-time investor.
Yeah.
You gotta sacrifice at the beginning to get somewhere.
Yeah, or you just get creative and you go buy a short-term rental as a vacation rental,
Yeah.
right? So
and you know what? That's what we're actually pivoting with that strategy as well. So we're using multiple different strategies to make it work. Because we used to do a lot of flipping. That was kind of our active income, and we've pivoted to now short-term rentals.
Yeah, just with a lot, and the market's always changing. Like you said, interest rates change, things change, market conditions change, and you just have to be able to pivot based on, again, but like really identifying your why and what you're trying to do, and then finding strategies that kind of work with all of that. So we've talked a lot about real estate. Talk to us about grit and growth, and talk to us about why you're doing it and what you're trying to do with it, and really who would benefit from this type of coaching.
Yeah. So I'll start with kind of my mission, which is to help entrepreneurs live an intentional life by design. That is my mission statement. And so obviously I'm focused on entrepreneurs. And when we say entrepreneur, it can still be somebody who's working in a W-2 job, but has an entrepreneurial mindset. And if they're looking to maybe get out of that full-time W-2 job and transition into being a business owner, being an entrepreneur, or if they're happy in their W-2 job, but want to start something on the side or take their side hustle and make it something bigger, better, more enjoyable, that's where I come in. And so that's a pathway that I've taken in the past, and I've been surrounded by people that are doing just this, and that's really where I can help. Now, why I started it, I'll be honest, it was a couple of things. One was that, there's a little bit of a concept called the conveyor belt. And when you purchase assets, it's kind of like you stick them on this conveyor belt, they're moving along. Let's say that you buy a multifamily apartment complex, and it's on a 5-year timeline. You're making a little bit of cash flow as it moves down your timeline, your conveyor belt. Maybe when you refinance it in 2 or 3 years, you pull out some cash. Eventually you sell it in 5 years. You take proceeds and maybe you buy another asset, or maybe even 2, and put them back on your conveyor belt. So these things are moving along and they're creating wealth for you. But it takes a long time to get a lot of assets on your conveyor belt. You're not going to get rich off of one apartment building on your conveyor belt. And so there's a space or a gap between assets being on your conveyor belt. And that's where you need income. You need to live, especially if you don't have a W-2 job, you need to find income for that. So when I recognized that was my situation, I started exploring what could be my additional streams of income. And I went through a little exercise where I just took a white canvas and just said, if I could do anything, what would it be? And I listed all these things. There was like 30 things. And then I scored them in 3 ways. How much time commitment was involved, or another way to say it, how passive was it? What was my passion for doing it? And what was my skill level? And when I aggregated all those up and everything kind of surfaced to the top. The top 4 or 5 things were all related to coaching, consulting, training, mentoring. And I took that as a pretty solid sign. And so I said, I'm going to go out, I'm going to get certified as a professional coach, and I'm going to start a coaching business. And here I am.
That's amazing. Yeah. I love how you shared that story on and how you came up with it, which was very, very logical. You thought this through, and this is kind of your calling, I guess.
Yeah, I mean, I get a lot of energy out of it.
Yeah.
And so, if I fast forward to a question that you asked about how do I spend my day and my intentional life by design, and by the way, I actually piloted my life by design back in September. I took about 18 days and I did this. I went out to Utah, stayed in our vacation rental, but not as a vacation. I tried to simulate how would it be to live the life that I want. And so I wanted to basically wake up at 7 o'clock in the morning, take my dog out for a run / hike, come back, take some coaching calls, get on a couple asset management calls, make sure I check in on my properties, do a little bit of productive work, wrap up my day about 2 or 3 in the afternoon. My wife and I would then go out, for an exploration somewhere out in the mountains, do some more hiking, maybe wind up the day with a glass of wine or a cold beer and some dinner and, start it all over. That's it. That is all I need. And so I tried to make sure I was practicing that and try to make that happen. And so that's where the coaching fits in.
Oh,
that sounds great.
Awesome.
Yeah.
So yeah, Tony, I mean, if people want to reach out and if they want to learn more about your coaching, about all of the other things you're up to, what's the best way to reach you? I know that you have a website for your multifamily group, which is Novo multifamilygroup.com. And then you have the grit2growth.com. There's some dashes in there, so I'll make sure we put it in our show notes. Is that sort of the best way for people to reach out?
Absolutely. Yeah. And you'll put the website in the show notes.
Yes.
On the website. There's a button they can just click to schedule a discovery call, complimentary discovery call. We can spend 20, 30 minutes, explore whether coaching is right for any member of your audience.
Okay, awesome. Yeah. So
And it's grit-2-growth.com.
Yeah.
So
yeah.
It seems like you're very experienced, and you came from this background as management consultant. So, and you got certified, so you got a lot of great experience, along the way.
And walking the talk, right? Like trying to live your intentional life by design. Doing all the things that, you've recognized make you happy, and really focusing on why you're doing all of it and tying that all together. So I think that's really great. I want to thank you for coming on our show today. We will definitely link all of your websites and your contact information so that if people are interested in reaching out or learning more, they can definitely do that.
Thanks so much, Tony. We appreciate your time. Been valuable. Right. Yeah.
Thank you for having me on. It was a great conversation. I hope
Awesome.
It brings value to your listeners.
Absolutely. Thanks again, Tony.
Okay. Bye-bye.